Everybody keeps focusing on Bitcoin crashing below $73,000 recently. But quietly behind the scenes, companies are still racing to buy more Bitcoin. And honestly, that might be the bigger story. Because while retail traders panic during volatility, institutions continue building massive Bitcoin positions anyway. According to new reports, Strive, currently the seventh largest corporate Bitcoin holder in the world, just proposed expanding its Bitcoin buying capacity by a massive $4.2 billion. Yeah, billion. The company plans to increase two separate at-the-market funding programs by $2.1 billion each as institutional demand for Bitcoin exposure continues growing. And honestly, this is another sign that the corporate Bitcoin accumulation race is far from over. Now, for anyone unfamiliar with Strive, the company already holds around 16,500 Bitcoin worth roughly $1.27 billion at current prices, and just last week alone, Strive reportedly raised around $194 million through preferred stock offerings, equivalent to roughly 2,600 additional Bitcoin at today's prices. That is aggressive accumulation. Now here is what makes this story especially interesting. The announcement came almost at the exact same time Michael Saylor's strategy made headlines for selling a small amount of Bitcoin to cover preferred stock dividend obligations. And of course, the internet instantly started screaming that Bitcoin adoption was collapsing. But honestly, the actual numbers tell a very different story. Strategy sold around 32 Bitcoin, while another major corporate treasury company is preparing billions of dollars to potentially buy much more. That contrast matters, because it shows how emotional crypto markets can become in the short term, while institutional accumulation underneath the surface keeps expanding anyway. Now, another important detail here is how Strive plans to fund all this. Instead of relying entirely on debt or traditional stock issuance, the company is expanding what are called ATM programs, basically flexible funding structures that allow the company to raise capital dynamically, depending on market conditions. And honestly, that flexibility becomes extremely important in volatile crypto markets, because when Bitcoin dips hard, like we have seen recently, companies with available capital can react fast and aggressively buy weakness. That is exactly the type of strategy firms like Strategy and Strive are trying to execute. Now, personally, I think this story highlights something people still underestimate about Bitcoin today. We are no longer in the phase where Bitcoin is only attracting retail traders and internet speculation. Now, public companies, institutions, ETFs, and major financial players are actively competing for Bitcoin exposure too, and that changes the structure of the market over time. Now, obviously, this does not mean Bitcoin suddenly becomes risk-free. Far from it. Bitcoin is still volatile, the market is still emotional, and geopolitical fear, liquidity conditions, and macro uncertainty still move prices aggressively. But underneath all of that short-term chaos, institutional infrastructure around Bitcoin keeps growing anyway. That is the important part. Now, another area many investors continue watching closely is Bitcoin scalability and ecosystem growth. That is part of why projects like Bitcoin Hyper have been getting attention recently. Not financial advice, obviously, but Bitcoin Hyper is currently priced around 0.013681 and focuses on improving Bitcoin scalability and usability as broader adoption continues expanding. The project has also been featured across CoinMarketCap, 99 Bitcoins, Bitcoin Magazine, and other crypto publications recently, which has helped put it on more investors' radar. And honestly, for people participating in crypto pre-sales or managing assets across multiple chains, wallets matter too. That is why many users prefer secure multi-chain wallets like the Best Wallet app, because it makes participating in projects and managing crypto holdings significantly easier overall, especially during volatile markets where flexibility matters. So bringing it all together, yes, Bitcoin recently faced heavy volatility and fear after dropping below major support levels. But while retail traders panic over short-term price action, major companies are still preparing billions of dollars to buy more Bitcoin anyway. And honestly, that might tell you where the smart money still believes this market is heading long-term.